August Piniaz with Real Estate Investing Demystified. We're at the Best Ever Conference, and we're with our good friend Anton with Peak Financing. So it's an understatement to say that you're a master of debt and financing. So talk to us about this environment we're in. Jerome Powell talked to, he spoke to, I believe, the House or the Congress yesterday, and talking about that there's going to be a lot of pain to come still. What's happening in the debt market? Give us a quick...
Obviously, when we look back to 2021, right, where the interest rates were record low, liquidity was there, everyone was putting money into real estate, including multifamily, so it was a great time to finance properties, and because money was so cheap, prices of real estate moved up significantly, and you still would be able to get 80% LTC in bridge loans, right? Many borrowers went into bridge loans because the agency loans, they were only able to get 50 to maybe 60%. And as a result, they took out bridge loans for so-called value-add properties. The problem now is they need to refinance those, and they are struggling to get the same loan proceeds with a permanent loan compared to the bridge loan that they already have outstanding, right? So I would say as a buyer today, there will be opportunities to partner up with some of these owners that have bridge loans outstanding, or talk to a lender, right, whether there can be a solution for them. If you're already in a bridge loan,
is that assumable loans you're talking about? Assume them, or somebody's term is finishing just to buy it from them before they have to renew?
Yes, to buy from them before they have to renew, right? These are typically 2 to 3 year loans that have 1 plus 1 year extensions, so they are not really long enough for anyone to assume, and they're not really meant to be assumed, right? So as a result, as a buyer, you generally do not assume these loans. You come in with your own financing, if necessary, even with a replacement bridge loan, right? Ideally, you can go into a permanent loan if the price is right. The problem is with the interest rates where we are today, it's still problematic to get a higher leverage. And there's still a little bit of a stalemate between sellers and buyers, where buyers are probably still 15 to 20% above where they really need to be.
And sellers are looking at the cap rates from a year and a half, 2 years ago, and buyers are looking at the cap rate compared to the interest rate they have to pay.
Absolutely.
Talk to us about interest rate cap, right? It was an idea that wasn't very common before. It was just a nominal thing that the some lenders didn't even ask for it. But it seemed to be something that's, it's very common today, and everybody's talking about it. Some people were talking on stage yesterday that interest rate caps weren't even something that we talked about. So talk to us about interest rate caps, especially some of the interest rate caps that are expiring and need to be repurchased, and now they're at 5x or 4x of what they were.
So going back again to 2021, to be fair with the larger bridge lenders, I would say 90% already back then required rate caps. Some lenders didn't require them, or they were willing because of the cost. Everyone was complaining about cost back then, even though it was really cheap, that they were only doing it for maybe 1 year or 2 years, so they had to extend it much quicker. But the ones that didn't have an interest rate cap as a requirement, and they felt, well, I can save money, I think interest rates will stay low forever. Now the cost to buy an interest rate cap is now 10 times, sometimes 10 times as much, right? So what does that mean? Obviously, either a lender already required for them to escrow on a monthly basis so that they can actually buy the rate cap once the existing one is expiring. And if you do not have that money, guess what you need to do? You need to raise money from your investors, the capital call, or then alternatively, you attempt to refinance, which in most instances, refinancings, typically the purpose is to do a cash out. Now we talk about the cash in, meaning again a capital call, Or then you try to sell the property which might work, but more likely than not, you will not generate return for your investors.
Yes.
In a worst case scenario, you actually lose some money for your investors.
And you might not have enough equity there because your property values on your NOI and rents you can get in, but those rents are dropping. The cost of management is going higher. So now let us ask you about. You talked about distress. You talk about people that might not be able to afford to repurchase their interest rate cap, and tough times make strong men, and easy times create weak men. So it's been such easy time and such good times for a long time. You can see the issues now. Are you seeing any distressed deals right now?
Yes, we already have seen a number of them. There was just one deal where the investor lost all of their money. Some deals they lose some of a percentage, but not all of it. But there are certainly many more deals now where they are willing to take the loss, where they're actually losing. Many deals we see that are in that situation, but the GPs or deal sponsors are willing to actually inject their own money, right? But in other instances, they already have done capital calls, or they have announced to do capital calls. They may not have done it yet, but they're already preparing for it. And the reason why they haven't done it is because they still have enough reserves. Now, the problem what we see a lot with these deals is that they build reserves that were also meant to do capital expenditure, right? CapEx, so for capex, to rehab the property, to be able to raise the rents to the level that you were supposed to rent them.
Value add.
Classic value add. So now you spend that money on that service until you run out, and naturally the lender is also then not funding the additional capex that you were supposed to spend, because you never spent it, right? So there are a lot of problems, right? But even if you do the right thing and your property is performing well, you still have the issue of cap rates now having moved up. So your LTV on the refinancing is potentially a challenge. Your DSCR is also a challenge, right, because of the much higher interest rate. So even if you perform based on your pro forma, you may still have to bring equity to the table to actually refinance out of that deal.
Now, continuing this conversation, knowing that there's some deals in distressed territory already, some investors are losing their capital. Jerome Powell is talking about is going to be continually raise rates. And the markets are accounting for another 100 basis points at least to be risen. Do you think there's going to be blood on the streets now with all this pressure coming?
I think there certainly will be some blood. We already have seen it. The question is, how much is it going to be, right? I would say the good sponsors that are well capitalized will be able to capitalize from that blood on the street. Unfortunately, the ones that are weak, that don't have the experience and do not have the capital and the ability to convince passive investors to inject money to survive that difficult time, they will unfortunately lose the property, right? So in this environment, it's key to partner up with experts in that segment, right?
That's my next question.
That have deep pockets.
That's my next question. In this environment, is your advice that sponsors should still look at deals and to come into the market, or is it a time that you want to sit on the sideline and see what happens with the next interest rate hikes and what have you? What is the thesis, or can they be opportunistic? Does any deal make sense, or does no deals make sense? What's going on right now?
There are still deals that are being made, right? Commercial real estate, including multifamily, it's all about numbers. Yes, obviously location is important, but there is a number for every location, right? So everyone in the capital stack needs a certain return, and as long as everyone can be satisfied with what they need, there's a deal to be done, right? So for a sponsor who is looking for deals, absolutely look for deals, and just do not be afraid by whatever someone is asking, right? Underwrite to what works for you. and do not be afraid to offer what makes sense to you, and you might be surprised that it will work out.
Yes. Now, to say that you live and breathe this business is an understatement. Now, what is your prediction as far as when the interest rates will either plateau or they start decreasing? Is it just like the equities market where they're predicting is a Q1 2024? What is your prediction?
Yes, so obviously based on again what Pavel just mentioned, and already mentioned it before, I expect two more raises, potentially three. I never thought that they would pivot this year, right? Unless we have a major event, right? That is a global, where war gets out of control, or something else that is truly a black swan event. But if we do not have a black swan event, I do not see them to pivot this year. And even if we have a recession, it takes time for inflation really to be the less important element for Powell, right? So next year, potentially, we will see some lower rates on the short end. But if we have a much faster decline of rents, I always say to sponsors, be careful what you're wishing for, because if rates really are being dropped quickly, we are in a very difficult environment economically, which means that credit spreads will likely increase. So yes, maybe your base index, the loan is based on, might be lower, but your credit spread is higher, so you may not be able to actually have any lower interest rates.
Got it. Oh, absolutely. Hey, really appreciate your time. Thank you so much. Please let our viewers know how to connect with you, how to be able to reach you, please.
Sure. Again, my name is Anton Mattli, co-founder and CEO of Peak Financing. My email address is anton, A-N-T-O-N, at peakfinancing.com. But you also can reach me on LinkedIn, on Facebook. We are all on social media, so I'm happy to connect with all of you.
Awesome.
And thanks again.
So much. Thanks again. Thank you.